So I was watching a video just a couple of days ago of Guy Spear of investor fame, long-term value investor, aquamarine fund. Guy's been around for many years. He's considered one of the super investors, and he was talking about investing for retirees and investing for those that are looking to secure their financial future going forward. And the discussion was around different asset classes. And he made a really interesting point that I thought made absolute sense. And that was for those people that are comparing cryptocurrencies and Bitcoin as a store of wealth to something like gold. Now, as a value investor who invests in dollar-producing assets companies, I'm not an investor in gold at all, and I don't encourage people to be an investor in gold because gold essentially doesn't produce anything. But for anyone who is confused or unsure of how they should look at cryptocurrencies and Bitcoin as a store of wealth going forward, with respect to saying, okay, I'm going to put 10%, 15, 20% of my money into cryptocurrencies because that's going to be a store of wealth going forward. Guy makes the simple point of this. Gold is never going to trade to zero. It is always going to be worth something. It has always been worth something, and it's never ever going to zero. But cryptocurrencies and Bitcoin could absolutely have every chance of going to zero. And I just think that sums up perfectly to answer the question of that store of wealth component. Now, if you actually look recently at the way that cryptocurrencies have been trading around the inflation question in the United States, around the interest rate question in the United States, around geopolitical tensions with Ukraine and Russia. You have a lot of these crypto fans, and I'm not here to, begrudge those people or, tell them not to invest in what they want to invest in. Go ahead, go for your life. Best of the British to you. But anyone who says that Bitcoin is an inflationary hedge, well, that's been put to the test in the last few months and failed. Anyone who says that is a risk-off hedge, meaning that when financial markets fall, it will act like gold and rise in value, well, that's been debunked as well, because the geopolitical tensions with Russia and Ukraine, Bitcoin has fallen in value, not risen in value. So anyone saying that it is a potential store of wealth really doesn't understand what a true source or a store of wealth truly is. So recently, cryptocurrencies have been acting exactly as you would expect something with increased significant volatility to act, that is traded predominantly by retail novice investors in what's called a risk-on, risk-off environment. So if you watch Bitcoin, when there is financial market stability and stock markets are rising, Bitcoin will be rising. And when stock markets have been falling on certain days, Bitcoin has also been falling. And that is completely opposite to what a hedge would be with respect to a store of wealth or a safe haven asset. It's completely not reacting in that way. It's following exactly the risk-on, risk-off environment. And, I find it interesting, many of the crypto fans, and again, I'm not here to bash those fans, but I'm just here to put some facts around it. With what many people say, they say, well, Warren Buffett and Charlie Munger don't like cryptos. Munger is much more outspoken than Warren. Warren has basically said it doesn't produce anything, therefore it's worthless. Munger has said that it's like rat poison squared and, all these sorts of things, which are much more aggressive. And a lot of people say, yeah, but Warren and Charlie don't understand crypto. I think that's a really ignorant and, quite frankly, disrespectful thing to say. And let me explain why. Yes, Charlie is 98, Warren's 92, coming up 93 this year. These are some of the smartest people on the face of the earth. I mean, we're talking about guys here that have IQs that essentially many people class them as geniuses. These guys are multi-billionaires. Charlie nowhere near as much as Warren, of course, worth well over 100 billion, and would be worth over 200 billion if he hadn't have given his money away. But I find it really interesting that these crypto fans that consistently say that Warren and Charlie don't understand crypto, these people aren't wealthy. They're not even rich. They're not even worth $1 million. These people are simply speculators who are hoping like hell cryptocurrencies rise in value. And let me assure you of one thing. Warren Buffett and Charlie Munger and many of the asset managers that don't own crypto and will never own crypto, they are incredibly smart people and they understand crypto very well. They just choose not to own it. They choose to have their money invested in dollar-producing assets that in most cases are a store of wealth, will continue to produce more goods and services, and therefore the volatility is exceptionally lower, and the probability of them generating a meaningful result over time is really high. Now, when you have something right now like crypto that is moving in value 5 to 10% in volatility, in many cases a day, in some of them more than that, anyone who's a serious investor is not going to take that asset, that investment seriously, because how can you? I mean, why would you pay for something in crypto when the very next day it could be worth 10% less or 10% more? How is that ever going to be taken seriously? And for anyone who says, oh yeah, but all of the big brokers and all the big investment banks and all the big investment houses on Wall Street, etc., they're all offering crypto now, Andrew. Again, this is a very naive thing to say. When they say, oh yeah, but the CME or these exchanges are now offering crypto, etc. Again, a very naive thing to say, because they're doing it because there's a dollar in it. They're not doing it because they see it as a wonderful investment. These investment banks and other investment vehicles that have propped up that give you the opportunity to trade crypto or whatever it might be, they're doing it because there is a dollar in it for them every time some punter around the world decides to trade it. That's the only reason why they're actually offering it. And when it eventually does blow up with respect to the crypto phase that we're in now, I'm not suggesting that cryptos won't be around in the future or blockchain technology won't be around, but if anyone thinks that the 2,000 to 3,000 cryptocurrencies that are being launched every month or two, and we're going to have 10,000, 20,000, 30,000 cryptos in the next 20 or 30 years, they're going to still be around. I mean, quite frankly, that's fanciful. Fanciful stuff. And therefore, it's very important as an investor, you don't get lost in the bullshit and you actually look at things on a factual perspective. And I think Guy Spear sums it up perfectly well. If you're a self-funded retiree, if you're working towards retirement and you're thinking about whether or not you should have crypto as part of your investment philosophy, just give consideration to the fact that it could go to zero. I'm not saying that it will, but it absolutely a digital currency that is manipulated by criminals extorted by criminals is just some sort of electronic transaction that people can hack, absolutely could go to zero. Do you want your retirement savings, whatever that might be, going to zero? I'm not an investor in gold, but as Guy says, gold is never going to zero. The probability of a great quality listed businesses that actually continue to earn more money, the probability of them going to zero is extremely low. But the probability of a crypto going to zero is, in comparison, incredibly higher. Anyway, I know many of you will disagree with what I said. Some of you may agree. And if those, that are value investors will most likely I've been preaching to the converted. But I just want to put some of my thoughts on it and agree with what Guy's been saying with respect to, if you are someone who's genuinely looking at crypto as a store of wealth, it ain't no store of wealth. It doesn't act like a safe haven asset. It acts like a high risk asset. In fact, I wouldn't even call it an asset. Have a great day, guys. See you next time.